Okay guys, a review of today's trading on the FTSE. So quite a long one today because quite a lot to say. So yesterday I got the markets wrong and we got stopped out of a trade when it passed through 7070. So I wasn't expecting things to develop into a full-on crash, which it has now developed into. So just confirming that on the report and then really go into opportunities. So we were saying whilst below 72.30, the crash is likely to end between 6750 to 6800. So that's the sort of area you would expect it, that we're expecting it to end. Worst case scenario, we're going to see the FTSE down to 6500, but that would require the virus to have quite a big outbreak and effect in America, which at the moment it's not, but of course that could change. There will of course be dramatic recovery rallies, which means yes, the market's falling, but markets don't fall in a straight line, and they do have corrections. So we will see some recovery rallies come into the markets and push them up. But really, and only unless we get those rallies above 72.50, does the market become positive again. And really, I'm backing that up with saying that for price to get above 72.50 again, probably going to need a vaccine released into the market for this virus. So moving on today, positives on the market today. Although we're in a crash, we do have a 27-point dividend, so that's going to attract investors at some point today. And we're saying that although we're in a crash, this is an attractive trade. It's market function. But we need, if we're going to go for this, we do need our stop below 68.60. More on that and why it shows that stop in a second. You'll also notice we have major long-term support at 6880. This level here has been on the report for over a year, so it's a real key level. So because it's such a key level on such a big time frame, this is real long-term direction, I'm going to expect some sort of recovery rally near this area and back up to around 7,000 to fill the gap today. Because the market, even though it's in a crash, it is quite extended. Now these levels are more like investments levels. You can actually position long-term if you see these in the reports, because we do expect them to react. So we'll look at that in a second. So based on this analysis, we were looking today, any rally up to 7050 or higher, we're going to sell. Target 6800, stop above 7250. Stop is above 7250 for the reasons above. Also, the dividend buys can be looked at from 6930 to 6900 with stops below 6860. So stops below, well, stops were actually 15% ATR below 6880. Target 7000. And not valid if we got to 7,000 first. 5-minute bar we didn't do in the end. Spike down of 30 points we didn't get, but if we had, we would have bought it. And we're just saying here the gap is likely to fill. So the only trade really we got today so far is the buy from 69.30 to 6900. Now this is actually a trade that I did live with my pro traders. I'll show you how we traded this. Alright, so first thing to note, that real key level we've been banging on about for almost a year, 6880, what a reaction we had off there today. But this is the market open here, 8 o'clock here. We moved off, we didn't hit 7,000, so the buy was confirmed as still valid today. And then we got down towards the buy zone, and the buy zone was 69.30 to, let me just get that, 69.30 to 6900. Now because I was with my pro traders at the time, we bought it a little bit lower, but I'll show you why we did that in a second. But anyway, that was the valid buy, and look, it's come up to around 69.83. We'll need to see if it moves higher, but expecting to see 7,000 at some point today. Now the trade we did, let me go to the 1-minute chart. I just want to clear this off. So as the market was moving down, we were on the 1 minute, and we just didn't see a valid buy signal. We almost took this one. It was in the right range. It was a 1, 2, 3, but we needed it to break this, and it never did. So then we just waited, and we didn't get anything down here, and then suddenly we did. We had 6880 here, so we waited for a 1, 2, 3 in the 1 minute chart. Now reversal signals are actually all part of the training in the live room. There's a video on it, so make sure you watch reversals. But 1, 2, 3s and engulfing levels are things that we use. But we've got a really nice 1, 2, 3 here, three higher candlesticks, positive, right back above 6880. It just took out the level. Remember, our stop for this was below 6860. So we got in at 92, and basically I said to our pro traders, we had a when it got up to 69.16, I said to basically take half profits and pay for a stop below the lows, so the trade was risk free, and then ride it up to 7,000. So that's how we've traded it. We've got a risk free position with a paid for stop below there because we've already taken half our profits at 69.16, and we're just running it up to 7,000 hopefully. We've already had it, so it already rallied really nicely. It's got up to 69.84, but hoping this extends later for the divvy and takes us up to our ultimate target at 7,000, which will be a really nice risk reward on this trade. Hopefully also capitalized on this one. Let me know how you get on. My email is mark@magnetitrading.com. If you got any questions, just let me know.